a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about healthcare ETFs. And healthcare is the best performing sector over the past month. So we know that stocks have been under pressure lately, and that is mainly because of these rising uncertainties related to the war and inflation. And the Federal Reserve is expected to raise rates aggressively to tame rising inflation, and some experts fear that that could result in a recession. And healthcare, utilities, and consumer staples, these are the defensive areas of the market that tend to do well in a slowing growth environment because they can still generate reliable, predictable cash streams even when the growth slows down. Now, as I mentioned, healthcare has been doing very well over the past month. It is up about 12%. So companies like United Health, AbbVie, Pfizer, Eli Lilly, these have been doing very well. But the sector had underperformed the broader market over the past 2 years. And that is why the valuations still look attractive when you compare to the broader market and particularly compared to the technology sector. So given its defensive and safe haven status, many investors are putting money into healthcare stocks and ETFs. So let's take a look at three most popular ETFs in this space. So the first one I'm highlighting is the most popular ETF in this space, also one of the cheapest, 39 billion in assets and just 10 basis points expense ratio. It follows a market cap weighted index. Now, all the three ETFs that I'm highlighting today, they are market cap weighted, but they follow different indexes that define healthcare a little differently. So that is why you will see differences in the number of holdings, and some are more concentrated than others. So this has just 65 holdings, so a lot of exposure to the giants in the space. Now, if you want to learn more, you can go to the quote page on Zacks.com. You can read our research report articles, a nice dividend yield too. And then you can go to the external homepage of State Street to learn more about this ETF. So this has 65 holdings, as I mentioned. So you will see that if I go to the holdings, one more thing I wanted to show you, the ETF has a forward PE ratio of about 17 times, and the S&P 500 index is about 20 times. So that is why this is a more attractively valued sector. Now, if you look at the holdings, you will see the giants in the space. United Health has almost 10% exposure, then Johnson & Johnson, Pfizer, and AbbVie, and all these companies, as I mentioned, have been doing quite well over the past month or so. The second one that I'm highlighting is by Vanguard. This is also very popular, but not as popular as XLV. This has 18 billion in assets and 10 basis points expense ratio. This also follows a market cap weighted index, but defines healthcare differently. So that is why a broader exposure, a broader definition has about 443 holdings. So a much more diversified portfolio. So that means this would do well when smaller companies in the space also do well, mid-cap and small-cap companies, and XLV will do better when the giants in the space will do better. So we'll look at the performance later, but let's go to the quote page on Zacks.com, and from there, the external home page, look at the details and holdings. So as I mentioned, 443 holdings, a dividend yield of about 1.2%, and look at the portfolio. So large, medium, small, everything is there, and you will see the same companies, but relatively smaller weightings to those companies: United Health, Johnson & Johnson, Pfizer, AbbVie. The third one I'm highlighting is by iShares, ticker symbol is IYH. This is also popular but much smaller compared to the other two, and it is a bit more pricey too. 43 basis points expense ratio and 3 billion in assets. As far as the number of holdings is concerned, it lies in between. And again, you can use the link on the quote page on Zacks.com to go to the iShares webpage for this ETF and look at the holdings and other details. You will see the same holdings, but again, a slightly different weightings and exposure. Pharmaceutical, healthcare equipment, biotech, these are the top areas in this ETF. On the next slide, I have the comparative performance over the past year. So all three ETFs have significantly outperformed the S&P 500 index, which is up about 10% over the past year. And XLV, the spider product, has delivered the best performance because the giants on the space that we saw, they significantly outperform. So XLV is up about 22%. iShares product is up about 18%, and Vanguard product is up about 15%. And on this slide, I have the year-to-date performance of these three ETFs, and healthcare is one of the very few sectors which is in the green for the year. Most of the sectors are down for the year, and energy is a significant outperformer, which we know is for the reasons that we have discussed earlier. So year to date also, XLV has delivered the best performance. It is up about 2.5%. The other two are also in the green, but barely. And the S&P 500 index is down a little more than 4% year to date. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and I'll see you next week.